Well. Welcome back to the show, everybody. This is the episode 8 of the halftime show. We've really came a long way up until this point, giving you value back and forth each month, each week, and now we're here for a special episode. I'm Coach UV, and this is the unique trading group where strategy meets mindset and discipline turns into income. Now, listen to me very carefully, all right? If you're tired of losing trades, all right, if you're tired of losing trades, no consistency, you're feeling stuck, all right, you're getting caught chasing candles, stop right now, all right? You found the right video, okay? You found the right video. And why do I say that? Because this is not another stocks only go up channel, all right? We teach traders how to master psychology and turn discipline into income. So do me a favor, click that link above and find out how you can join the community, because option trading can change your life, but without a plan, it'll ruin it. All right. So this is where we turn discipline into income. This is the place you want to be. I appreciate your time tonight. So, before we get ready for this show, I want you guys to understand what we're doing tonight. You came here and we're going to be talking about a recap from the trap that I mentioned, from the choppy action and price with SPY. We're also going to be talking about Tesla. And you guys got to be aware of earnings in the OPEX Friday coming up Friday, all right? Every third Friday of the month, we have this phenomenon called OPEX Friday when contracts expire. And so this is what we're going to be covering. Stick around. You don't want to miss this episode 8 of the halftime show. All right. So we're going to roll into the intro and we'll be right back with you. We are okay, so you can see that picture in this image. Okay, now this is a bearish pattern in nature if you're first time watching, and that's exactly what it means. Okay, but as other traders and retail traders see a classic head and shoulders pattern, this is the only thing they're thinking about. They're just waiting for this pattern and they don't have any context. But they see this as a bearish pattern as a new trader, as a retail trader. Yes, the pattern works. However, if context is missing and you don't see the bigger picture, you can get trapped in the minutia of emotional trading and trading just patterns without having context. So this classic head and shoulders pattern here on the hour time frame works. However, if context is missing and you don't see the bigger picture, you can get trapped in the minutia of emotional trading and trading just patterns without having context. That part is very, very important in this recap. This is a video that I posted titled Retail's #1 Blind Spot Exposed, the auction system that never teach you, a mini course. Check out that link below and subscribe to the channel if you haven't, and go watch that video. Don't take another trade without it. All right, let's continue to recap, because this very recap is going to continue the story, because you want to know where you came from so you know where we're going. All right, let's continue the show. Context. So this classic head and shoulders pattern here on the hour time frame, all right, this is what retail see, but I don't see that. I see a bait pattern, a liquidity flush designed to trap impatient traders before CPI next week. That's right, CPI comes next week. This is a data point that's released in the stock market within the months and throughout the year to give a gauge on inflation in the prices of goods and services. So this candle right here, all right, let's go to the candle. All right, let's say, for instance, we turn on the candles, because right now I have on what they call Heikin-Ashi candle. It's a different way, a different form to see a candlestick. But since we're here, and I want you to see this example, all right, so right here, you see this candle here, okay? We are dealing with this candle right here, all right? We'll circle it, all right? This green candle, the long wick, that long line right here. You see that candle? This candle is what we're going to be dealing with now. You see that right here, right? What you saw was fear. Okay? You saw fear. Why is that? Because we were actually going down. We were actually going down. Okay? Because you guys seen fear, the retailers, right? Right here, they thought, hey, we're dropping, we're panicking, and we have to fall. That's the mentality of a retail trader, right? I didn't see fear, right? I seen fuel. We're not looking at the same chart when it comes to retail versus seasoned traders. We're just in the same simulation, what I call an auction, the matrix, all right? So you see this on an hourly time frame, and this is the core of my precision auction system, all right? Auction flow, liquidity pools, and volatility triggers, okay? Now I'm going to stop that video right there, all right? See, the point is to trap in liquidity. What does that mean in a very, very simple form? What does that mean to trap in liquidity? Well, it just means that we're using rookie mistakes against them. We're using rookie mistakes against them, okay? What if you ever thought the opposite or the inverse? You ever thought about paper trading, a simulated account where you can trade with fake money and see how the process works to get your emotions together? You know, one of the worst things that someone could do is come into trading thinking about, I want to make money or I want to get rich. Those two things will mess up your mindset. You already started wrong before you even open up a brokerage account. You need to be thinking about the process, all right? You need to be trying to get educated, and you need to find a mentor, all right? This is a serious game. Millions and billions of dollars are transferred throughout the stock market each and every day. You understand what I'm telling you? Each and every day, millions of dollars are transferred between different accounts each day. And you could be a part of that. You could be a part of that flow, understanding the setup and the process. This is what's important, understanding the setup and the process and being very disciplined, all right? Personal development is very, very important when it comes to trading. And you need to understand that, yes, you listening, this is possible for anybody. I'm going to prove that, and I'm going to give you some guidance. So I appreciate you listening. Hit that like button so far if this is resonating with you, because I'm telling you, you can turn discipline into income if you focus on the process and not the profit. Most regular humans, trading aside, as a regular human, they're not patient. They're not disciplined. They're not even managing their own life. And so it's hard to transfer over to trading when you don't have those sort of personal skills. And my book, The Power of Paytience, Mastering Emotions in Trading while Turning Discipline into Income, this book right down below in the description is a really good guide for you. It's like a Bible for trading. So I want you to check that out. Now, we're going to continue the commentary, all right? Appreciate you guys listening thus far. Now let's continue the show where you see these guys discuss option trading compared to the 9 to 5. Are you guys ready? All right, let's do it.
Now I love that. And so, can trading options replace your 9 to 5?
Yes. Yes.
Yeah.
Yes.
Yeah.
But think about it this way. Like I tell people this, right? That after learning how to do options, making $200 a day, that's a tip. That's like a by the way. No, seriously.
Yeah.
Okay, if you look at a 30-day period, there's 23 trading days.
Yeah.
If you make $20 a day, well, what's that math? That's like $8,000 a month, $7,000 a month. If you make $500 a day, that's $10,000 a month. Okay, that's totally doable for new people. Literally, there are people in our community who literally just started like trading options 3 weeks ago.
Yeah.
They're already making $420, $425, $1,000 a day trading options.
Wow.
It's all about that new skill set, right?
Yeah.
So if you have new information and then you execute, you're going to have new manifestation. But you can't have one of those two pieces missing.
Yeah.
You need the information,
Yeah.
you need the execution,
Yeah.
then you get the manifestation.
Yeah.
So you just got to put in the work.
Yeah.
Stock market will give you paychecks.
Seriously.
What I would say is the 9 to 5 is a subscription of silence. It's a subscription of silence.
Yeah.
Why? Because the paycheck that you're receiving is essentially someone else's
Now, I want to pause just for a second while you guys are watching the show, because what they're saying is important. And he's saying that 9 to 5 is silence. I kind of disagree about a 9 to 5. Not to say the brother's wrong in his assessment, but working a 9 to 5, in my opinion, all right, is a good foundation for anybody, especially a man, to be able to go to work and produce for his family, because you can use that job as a vehicle for investments if you look at it that way. Putting in the time early, working, getting your hours in, learning to get up in the morning, brush your teeth, shower, get ready, get on the road, whatever you need to do to be on time, but be disciplined enough to produce cash. But educate yourself on what to do and how to manage money. All right. So I just wanted to add that little comment. Excuse me. And all right, we're going to continue the video.
Actual.
Yeah.
Right? So instead of, and here's the deal, right? 9 to 5 workers get paid 26 times a year. 26 times a year. An option trader gets paid every single.
Warning. Don't believe the AI trading hype until you watch this entire video. Hi, I'm
day.
Wow. Yeah.
There's a huge difference, right?
Yeah.
So if you're asking, can I replace my 9 to 5 income? Well, if you're getting paid every single day versus only getting paid 26 times a year,
Right.
then you can do the math yourself, right?
Absolutely,
Now,
absolutely.
the difference is this as well. Your paycheck over those 26 days, those 26 times you get paid, right? Because you have 52 weeks in a year. You divide that by 2. That's as far as bi-monthly checks, that's 26 weeks, right?
Yeah.
So you have 26 paychecks, right? Those paychecks stay the same every single week.
It doesn't change.
It doesn't change. With options trading, when you're making money every single day, there's what we call compound interest. Albert Einstein calls it literally the most powerful force in the world.
Eighth wonder of the world. Yep.
Right?
Yep.
So when you're compounding your money, your paychecks actually become incrementally more than prior.
Yeah.
So, I mean, we're not mathematicians here, but I mean, the math is mathing at that point to say you can be a full-time options trader and replace your 9 to 5 income.
And what does that look like? Like, being a full-time, options trader, does that mean that now, I got my glasses on, I got 3 computers, and I'm stuck looking at computers all day trying to make sure I know the movement of things? What is the time commitment?
So most of the time, there's a time of the market that you have more volatility. As options traders, you have to trade with the volatility. And for me personally, I trade at the market open, the first 1 or 2 hours, and the last hour of the market. The rest of the day, I'm just chilling,
Wait. So you're saying you trade the first hour or 2 of the market opening, the hour or 2 before the market closes, and that's it.
That's it.
You replace your 9 to 5. So you're telling me, whoa.
As I'm telling you, it's crazy.
Whoa. So you're telling me that there's somebody right now who's working 40 hours,
Yes.
right? They're working 40 hours a week and making nothing, and I could work 4 hours a day
Yes.
and make a fortune.
Absolutely.
And sometimes you don't even need that much time. And the thing that people don't realize is literally a 9 to 5 worker and an options trader, they're opposite. What do I mean by that? Okay, as a 9 to 5 worker, I used to love Fridays and I used to hate Mondays.
Yes.
As an options trader,
you love
I
Mondays.
hate Fridays and I love Mondays.
Right.
Number 2, options trader, he told you the beginning of the market, 9 to 11, and then 3 to 4, those are the best times to trade.
Yeah.
When is the lunch break for 9 to 5 people usually?
It's like 12.
11 to 12,
Yeah.
okay? We hate that time. We love early in the morning, 9:30 to 11, and 3 to 4. It's all about having the knowledge and knowing that, okay, these are the times where you have the best opportunities because the market does not pay for your time. It only pays you for opportunities. As an options trader, what you're learning to do is learn how to recognize opportunities.
Yeah.
And when you become masterful at recognizing opportunities, you can even trade for 30 minutes a day and make $4 grand.
Word.
And close your laptop. As an options trader, what you're learning to do is learn how to recognize opportunities.
Yeah.
And when you become masterful at recognizing opportunities, you can even trade for 30 minutes a day and make $4 grand.
Word.
And close your
All right, listen, I'm going to stop the video right there. I want you guys to understand something. If that video resonated with you, if it resonated with you and you never heard or anybody talk that way, all right, it's because it's new, all right? This is a matrix. And today, just based on what they said, now we're going to clear my chart. And I want you to see what happened today, just today. Based on my recap video, when I said that retail traders are going to be exposed because they trade with fear. And I mentioned that we could fall back, right? Remember that video where I said we could fall back down and retest some of the previous closes and open, and we got that just today. We fell down to 617 and 618. This is a previous demand zone where price has bounced before. All right, this is why you join this group. And if you're part of the Discord, congratulations, because you've been making money and you've been learning. I appreciate you guys' time and trusting me. All right. And this is a repeat process. We're going to rinse and repeat. All right. This is what happened. Opportunity. Options pay you for opportunity. And since we got that bounce, what happens? We still buying because we are in a bull market. All right. And now we are above the previous close and open. All right. So we're showing strength. Now I'm going to show you some economic data. All right, we have some economic data coming out tomorrow on the 17th. All right, tomorrow is Thursday. We had the CPI, so that's behind us. So we're going to be focusing on July 17th. Tomorrow, the unemployment claims. All right, this data affects price, guys. All right, this data affects price, and whenever this data is released, all right, you can time the price and time this data and react. All right, and use the same strategies that we use. This data only makes price go to the direction it wanted to go a little bit faster. Let me say it again. These data releases only push price to where price is going to go anyway, a little bit faster. And so we want to understand when this data comes out so we can be ahead of the move. All right. Some people chose to stay out because we have data that comes out before the 9:30 open. All right. If you're in the United States, right, the NYSE exchange. So, and some people like to keep their money in because they're playing the volatility. And somebody's definitely going to benefit from their moves. All right. And so on a multi-day time frame right now on the SPY, we do have some lower highs. All right. We are above previous close. Okay. And so what we need to see is structure continue to happen. And we're back and forth into the zone. All right. With that data, we can fall back down here and retest these lows again. All right. Remember, whenever you see a big move up, all right, a big move up, all right, into a range, the bears are going to try to retest this halfway mark and or retest those lows. And think about how people who are taking their profit from this move up. So it's a lot of things happening. But if there's strength and we see these higher lows, if we continue to see higher lows, all right. 1 second, bear with me as I navigate the screen, because I want you to understand the same scenario we just went over earlier about trapping in rookies who are buying and selling at the wrong time. We can trade the volatility. You can master this and learn to pinpoint where this is happening at so that you can take advantage of it. All right, right here, case in point. And we're going to navigate the Tesla. All right, and we're going to see the market Eternals to see what's going on here. All right, what do we have on our time frame? All right, the hour time frame says that somebody couldn't afford price to bounce below here on these previous zones. We got our double bottom and we have a possible range breakout. All right, what we have to do is wait for data tomorrow. If we can get past 624 and 625, then we'll continue to see these continuous moves to retest these highs. But understand, you need to pick your poison. If you're not into a trade, wait for tomorrow to see where price is going to land so that you can react and create a plan for that. You understand what I'm saying? All right, so let's get over to Tesla real quick. All right, Tesla is ready to explode. Tesla is ready to explode. All right, we already got some high time frame participation. The hour is looking good. We are above the point of control on the volume profile. All right, and so last time, inside of my Discord, all right, I posted a actual call out for Tesla, all right, and I posted some video guidance in one of my Monday Madness videos, I want to say, and I gave out this number for Tesla, and Tesla is a really, really good stock for swings, all right, and so what I did was I pinpointed a certain type of stock, which was Tesla, and I liked the levels, and I gave out the levels, and I actually want you guys to see, because I want you to see that the same numbers happen over and over. What you see in the market is deja vu. And if you journal, if you learn to journal your trades as you're trading, it allows you to filter through some of the mistakes so that you can capitalize on it. You start to build this muscle memory. And that's what I want you to understand. And so that's the same thing that I'm seeing with Tesla. Okay? Right in front of you. 318.54. That was the call. Remember this number 318 on Tesla? If we see higher lows and we hold there as demand, we could bounce. But 318 is a magnet for price. All right. And we can click on that and go back to the actual message These numbers act as a magnet for price. So know both scenarios allows you to have knowing both scenarios allows you to be selective on which setup you want to take. All right, which takes me back to my point. All right, you got to understand what you want to take. If you're not already in the trade, you want to wait for a pullback. You don't want to chase because I'm up here telling you that I'm bullish on Tesla. No, you want to wait for a pullback because you never know. All right, if you wake up and we're high, don't chase. Wait for a pullback to retest these same breakout zones. All right, these same breakout zones right here. You see that? All right. Now, before we continue, all right, I want to take your attention over here to bar chart. All right. Right here we have ticker symbol U. All right. This is the special announcement. If you've been watching this long, thank you. All right. We are here. I want to give out this ticker for the group and for the free community. Check out this stock, ticker symbol U. I am super bullish on this stock. All right. There's a lot of gamma. All right. I just seen some big buys coming in. So if you're not in, take the time to wait for pullbacks in the market on maybe the 21 SMA, the 210 day, or the 5 and the 8. I love the 5 and the 8 for day trades. I love the 21 and the 200 and above the 50 for swing trades. These numbers I'm giving out are moving averages on the stock chart. All right. But right here is ticker symbol U. All right. This is barchart.com. If you never heard of it, hey, first time hearing about it, there you have it. We have 100% buy on bar chart. All right, 100% buy on bar chart. So listen to me clearly, okay? Listen to me clearly. All right. This system wasn't built for you to win, all right? But traders give you trading gives you an exit, all right? If you respect the process, then it's pretty much a pay you, but you have to respect the process. And I really want to reiterate this because it's really important as you watch the chart and you listen to what I'm saying about higher lows and things that these price action movements and finding the right opportunity. Look, imagine you being the person that buys here. You understand what I'm saying? So just take a moment to soak this in as I give you this live commentary, all right? But if you don't, this market is just going to take you out faster than it lets you in. So you got to respect the process. It's about the process and not the profit. The process is for you to take serious and to be disciplined. And the money is a byproduct of the process. All right. So let's lock in. All right. We got earnings next week. All right. Earnings is coming up next week. All right. And the market is about to move big. All right. So here's what we got coming. I'm gonna keep it short and punchy for you. I just want to go over a couple of names. Google, TSM, Netflix. Of course, Tesla earnings are coming up. A lot of volatility. Remember, we're mastering volatility. We're taking advantage. We're not fearful, right? IBM, all right. Also on the consumer side, we have Pepsi, Coca-Cola, Philip Morris, ABT, all right. These are some of the tickers, and we can actually check out some of those tickers, all right. We got Coke. Check out Coca-Cola, all right? Coca-Cola has earnings, all right? Looks like to me they're overbought. We don't know, all right? But we're going to have to wait and see for those actual numbers that come out, all right? We're going to have to wait for that because let's be honest, Warren Buffett has been buying Coca-Cola for a long time. Pepsi, all right? He's been very happy to be buying these shares over time. It's made him very wealthy, all right? So you want to think about that, all right? Some other tickers we can go to, all right? We got IBM. They have earnings. Let's check out that ticker, IBM. All right, IBM. What are we looking like? All right, bear with me as my screen loads up. All right, Netflix is also next. IBM is looking oversold. Let's check the hour. We got to see what the fundamentals are. Once the fundamentals come in and the data comes out, when the earnings come, then we'll see. But we maybe could get a possible bounce in the demand zone. Let's see, all right? Netflix, let's check Netflix. Now, Netflix likes to fly. If they do good, but we don't know. Maybe they're overbought. Who knows? Maybe there are people trying to get in, all right, at a low price, all right, before it bounces, right? Before it bounces so they can get a good price, right? If you don't trade options, you might not notice. But let me tell you this. If you trade options and you want to get a good price, most people, like when they buy shares, they hit the bid and they bid the market down. They want the best price. All right. They're playing a different game. And that's why the price comes here and it bounces quickly. And you got to spot those opportunities. Are you with me? You got to spot those opportunities. All right. And so let's get back to SPY. All right. I want you guys to understand that everything that I've taught you thus far, all right, with this episode 8 of the halftime show, your midweek breakdown, you're getting this commentary, you're liking it, all right? Hit that like button if you're enjoying it. But the one thing that you got to understand, you're going to have to understand that this can be possible once you make up in your mind that you want to take this serious and be consistent with it. And you're going to do whatever it takes to learn and to find one strategy, one setup, one stock, one mentor, and really, really lock in. You gotta lock in. Most traders lose right now. Why? Why is that? Because they don't have a system during earnings season. It's earnings season. They're not even aware of that it's earnings season. When companies release reports about how much money they've made over the past 3 months, you want to know what that is. If things are good and they have good guidance, meaning they're saying, hey, we're going to make more money in the future, then the stock goes up most of the time. And you can see these things before they happen. All right. You can see these things before they happen. And guess what? Both sides lose when they don't know the game. I'm telling you this. So see the market as a system. You're either in flow with it or you're fighting against it. The people who win aren't smarter. They're calmer, patient, still, waiting for the setup and the market to come to them. We create the patterns on the chart with human behavior. We just have a better human behavior trait and characteristics with this setup and commentary that I'm giving you. All right. I've been posting about these things and recording videos day after day, week after week for you guys. And to it resonate, I won't stop. I'm here for you guys. All right. They understand that sometimes the best trade is no trade until the data hits. This is the subtle switch in the mindset from a seasoned trader versus a rookie. All right. So let's talk about the broader market, and we're going to wrap this video up soon. As you see this chart, let's listen to the commentary, because this isn't just about earnings, it's about timing. And this week is OPEX Friday, the third Friday of the month. That means that options market is going to control a lot of the price action. Yeah, that's right. Your favorite tickers like SPY, QQQ, Tesla, it's all going to really be based on the data, and that's what you want to really understand. All right. So the dealer position, the market makers, they have the position and liquidity grabs and gamma flows. All right. These all work together. Gamma means fuel for a plane. The plane can't leave the floor and the ground and fly to a different place without fuel. Gamma creates that fuel, and that's what's happening with OPEX Friday. Remember, the third Friday of every month. So let me keep it real. All right. I want to keep it real with you guys, man. Most of y'all get trapped here at this time of the month. All right. You're trying to catch the breakout, but you're not watching the fake out. You're buying the dip without knowing why the dip happened. And the worst part, you're trading your P&L and not the chart. Let me say that again. You're trading your emotions, not the setup. That's why you cut winners early. That's why you cut losers. That's why you cut winners early. And that's why you let losers run. That's why FOMO enters into your mind. All right. FOMO into the top. You're chasing. So here's how we handle this. Step 1, wait for the earnings to hit. Let the volatility flush out. Step 2, watch the reaction, not the report. Price action tells the real story. Step 3, trade the follow through, not the hype. All right. Shout out to the Discord family. Okay. We've had traders send messages this week. Coach UV finally stuck to my plan. Small size. Took base hits. Walked away green. And that's really the blueprint, guys. That's really the blueprint. So here's the game plan for this week. All right. Respect volatility. Don't guess. React. Master your mind, or the market will master you. All right. This is serious. Okay, guys. So if you got value from this video at all, which I would assume you would, if you're sticking around this long and you're still here with me, then I would assume that you are getting some value. But if you are getting and you tap into this video, hit the like button and subscribe and hit that bell. That way you're notified when I drop valuable videos. This is the Halftime Show, episode 8. I'm Coach UV, and remember, discipline turns into income, strategy beats emotions, and you are the asset. You are the asset. So let's go. Until the next time, peace.